And now your show hosts, Greg Capra and Dan Gibby.
Hey, everybody, welcome back. Today, we're going to be talking about, does technical analysis still work in today's markets? Today's markets have gotten a little crazy, a little bit more erratic. We've seen this before. We've been doing this a long time. Erratic price action is a reflection of uncertainty, concerns, indecision. When everything's hitting on all cylinders, we don't get this kind of price action. How do we define erratic price action? We'll look at some examples of that. One of the things we like to say is that, looking at technical analysis and charting, it's a reflection of what other people think, placing their opinion out in the markets with money. And that's where we come to looking at shock patterns, failure patterns. At times, things are flowing beautifully. Everything works the way they did a gazillion years ago. And so the environment changes. And our approach is one in which it forces you to recognize what's happening in the current environment and change with it. Because if you don't, it's going to be painful. One of the hurdles that everyone has to overcome, especially in today's world of, the internet, which wasn't around when I started, but there's such an influence on all of you to make you believe in a lot of what's not true or very subjective, as we say. And once those beliefs have been created and you start thinking that it's a certain pattern or it's this specific indicator that's the key to making money, it's hard to break those beliefs. And I hope that we can help you do some of that today by showing you what's real, and that's price action and how technical analysis does work. But there are moments in time where you would think, man, none of this stuff works because it's just the environment at the time. So let's get into it.
Hey, Greg, same problem as last when I can't do the video. It says you stopped it.
Okay.
All right, so you work on that, please.
Seconds.
So, yeah, welcome traders. Yeah, Greg touched on a couple of things there, which we will be illustrating through examples and other commentary throughout the 1 hour session here. But the reason technical analysis works, yes, patterns can change. We had to adapt when all the automated computer trading came to the scene. This is not 1990s, so things do evolve. But technical analysis works because it reflects the sum total of all market participants putting their money on the line, long or short, on that time frame. And we are making determinations of future price action based on objective interpretation of that information. So this is our technical approach to trading anything that moves. No setup, no action. Give me a setup. Here are pictures of 9 beautiful bullish setups on any time frame, any instrument. This works the same on a cryptocurrency as it does on a stock, commodity, future, anything. We take that picture and we say, okay, well, where is this picture in the trend, support and resistance? What do multiple time frames suggest? All right, cool. You should have told me to hit the button. It works this time. So every chart you see us look at on whatever time frame, we're going to be talking about these multiple concepts because it's the sum total of these put together that make up our method. Now, today we're actually going to be talking about classical patterns a lot. These are just beautiful red and green candlesticks. And that's our starting point. And then we go back to that prior page to say, apply the other concepts. So today we're going to be focusing on some of these, what classical market technicians call classical patterns. But you're going to see through all these examples that just a word in a pattern that you might read in one of these books is meaningless unless you understand price action and put it in context of everything. So most of these patterns we're going to cover today in this classical sense are going to be continuation or reversal patterns. But you're going to see how we overlay our approach to determine if it's a high probability trade, like we always do. So let's see, a couple points here. We'll be talking about these. Here, Greg, this is your favorite one. Why don't you? So I know you're hesitant because a classical pattern, so I'm going to bait you here. A classical pattern is drawing this uptrend line like this and like this. So why don't you tell them what it means in objective terms, that we have a rising higher pivot lows. What does that mean objectively?
Sure. Well, a few things that I know people get not confused, but the change in words. Just cover that: supply and demand. Just change these words because this is really what it is, with supply being resistance and demand being support. That's where supply is where people sell or have sold before. The assumption is they'll sell again. Demand is where there's support, where people bought, and the assumption is that they will buy there again. As Dan said, drawing these trend lines, connecting the dots, is classical technical analysis. And part of the reason the failure rate is so high with doing this is because the whole technical analysis community is built on, what's that kind of wood that's flimsy, Dan?
Excuse
And
me?
breaks easy? That wood that breaks easy. It's type of wood, I can't remember what it's called, but you could snap it with your fingers. So it's built on a faulty foundation.
Yeah,
just
we
that
make
way.
airplanes out of them. Balsa wood, right?
Yeah. So rather than connecting dots, right? Dots are what? Swing highs, swing lows. You can refer them as pivots. So what's actually happening here? My opening comment was that charts are a representation of what other people believe. It's a representation of their beliefs with money. So what does this actually mean? Well, it means that at these points in time, right, that's a low. Why is it making higher lows? Because those that are bullish believe that they should buy ahead of this low. So they're becoming more confident or bullish. So the buying starts at a higher level. That doesn't mean that there are not individuals that want to buy here or here. They say, hey, I want to buy it even cheaper. But those others that start buying up here, the ones that are bidding below see that, hey, it's not coming down to me. So rather than sitting on the bid, I'm going to have to take the offer, and it runs up. And those that want to sell here, others that say, hey, I don't think it's going to get up there. This thing hasn't been doing very well. So I'm going to put my offers out here and I'm going to sell before. And it makes a lower high. And then it repeats again. And it could repeat again. So as these swings come to closer together, it reaches an inflection point. And you've been led to believe that by connecting these dots at some point, when it pierces this magical line
Right.
that you've now put on your chart,
Right,
that
so
now an advance or decline is going to start, right?
right.
It's ridiculous, right? But you don't know it's ridiculous because everyone says it's true. So why should you see a guy on CNBC doing this all day long, every day, right? Diagonal lines back and forth. So of course you think it's true. Ultimately, you find out that the truth is to the left and what individuals believe, and what they believe is displayed on the chart. And at some point, these forces of supply and demand reach a point where somebody's got to blink. And so at some point, it's got to eventually trade through the line, but trading through the swing will break the line every single time. And that's the actual point that it's got to get above. But as it comes closer and closer together, at some point, it's either just going to flatline and kind of go into a coma, or it's going to break one way or the other. So the formation of these lower highs and higher lows create a belief that right, everything's a belief because it's not true yet. It has to become a fact. Once it's a fact, we know that what it is, but we trade based on beliefs that we hope to become facts. So eventually, it's going to break one way or the other, and that's what this is. The same thing. It's getting higher, right? This is getting lower, and then eventually goes here. The lows are relatively equal, and then this lower high and eventually breaks. Now, are these patterns, which we'll get to, well, were they preceded by what?
Momentum move. Right.
Right? Momentum moves. Were they going up, down, or sideways before they formed?
Right.
So, like everything we talk about, whether it's a candlestick, whether it's a moving average, whether it's a swing, that's one piece of information that you now have to put together with the slide Dan previously showed. Support, resistance, relative strength, relative weakness, broader markets, so on and so forth, which then PA creates a strategy.
And as you'll see in every one of these examples, the crossing of the trend line is meaningless. We're going to be looking at patterns and candlesticks to determine when to enter these patterns. And as Greg said, they need a price void. So see, every one of these, as I said, they're either continuations, patterns. This is a bullish consolidation. This is a bullish consolidation. And these are continuation patterns. Let's go right to the examples. They're more illustrative. So remember the first slide, I said you're always going to hear us talking about the other concepts. So let's just start right here. I have this is our daily chart. Red and green candlesticks, color-coded volume. We have the 20, the 50, and the 200, which is a short, intermediate, and long-term trends, and they speed up the analysis. So this was a bullish closing breakout bar at the 20 after a gap fill, after a small gap negated, another move higher, and now it's deciding to rest for 2 weeks. But I'm drawing these trend lines just to show you the consolidation pattern in the arrangement of pivot highs and lows. So this now is a higher pivot. As Greg said, the stock's not retracing as deep as it was before. And whoever is up here selling the stock at these equal highs, that makes my ascending triangle. And now right here, our buy is over this bar, stop under the prior bar's low, manage in between. Look to the left, I have a price void.
And these, well, as we've been saying, just to reinforce, this is in a bullish uptrend. And while everybody wants to buy cheap so they can sell more expensively, more individuals are beginning to believe in this particular stock or instrument, whatever it is, that they're not going to get filled at a lower price. So they start bidding higher. And like we already said, at some point it reaches an inflection point, and that's the essence of a breakout.
These are ascending triangle breakouts after a nasty downtrend. But again, I'm just showing you this to say higher pivot lows, relatively equal highs. Look to the left, you have a price void. And these were two stocks we gave on the same day, same pattern, and closing breakout. And that's my entry.
Simple.
This is one was on our watch list here. Beautiful, what we call a 180 reversal. It was one of those 9 pictures of bullish patterns that I showed you. So this would have got our attention right there. That's a beautiful breakdown failure, 180, been going sideways for a month. Beautiful move. What we call a buy setup. That's one of the other 9 pictures we showed you. And now, you can count them there. What, 10 bars? Going sideways at this ugly red bar, higher lows, rising 20. We bought the breakout here. We had this is a closed trade, and this is the format in our open and close spreadsheet for subscribers. It shows you all of our trades, show you the technical setup, the date, the strategy, the symbol, the management in between. So this is just a wide range breakout, all time frames. So I'm not showing you the other time frames, but that's another concept of ours. Multiple time frames were in alignment. We bought there, and we had such a beautiful gain in 2 days, 16% return in 2 days. Take your money. We're off to the next setup.
Why I'm drawing those boxes there is to discuss why this happened, what's happening there. Remember, we don't know what's going to happen. Right? Dan and I aren't here to tell you that we have crystal balls and we know what's going to happen tomorrow. Right? What we know is those red boxes were resistance, and this was a buy setup right there. Some other day, this could have went like that. Maybe because of the market environment. We don't know. But what was happening that drew this ascending triangle is that buyers were absorbing, demand was absorbing the supply here. And eventually the same thing. They started bidding higher and higher till it reached a point where it was ready to break out. And so this pattern formed on this stock at this time in the broader markets, which may have had something to do with it, the broader markets. So different patterns are going to form at different times. And we recognize price action that, hey, this is, well, like that slide that we looked at, all of those candle patterns were bullish candle patterns. Which one is going to form today? I don't know, but we know they're all bullish. And we know this larger pattern is bullish because it's in an uptrend and what's happening. So Dan, being asked, how do you know a bearish flag from an ascending triangle in a downtrend?
Well, it's actually a good question. It's kind of getting back to this, and my answer is it goes back to this slide. I have to apply the other concepts. Show me the pattern. What's the trend? What's multiple time frames doing? Is it a bullish consolidation, or is it resting in a downtrend? Or possibly, is it a trend reversal because it's extended? And what are the markets doing? So I gave you a long answer.
So, no, you hit it on the head at the end there, because if you go back to that slide, Dan, not that one.
Which?
No, the one, this, because I'm sure this is what he was talking, is this an ascending triangle to be bought, or is it a bear flag where it's grinding up? So we're talking about these classical patterns. So something else that was going on here was this became climactic. In addition, this pattern, and we've seen this so many times, and why we look at market internals, a pattern like this, we've seen them do this amazingly, and we've also seen them do this. A vast amount of the reasons is because of what's happening in the broader markets and the market internals. So when our internals are lined up properly and the markets are lined up at a point where they have a higher tendency to retrace even in a bear market, this has a much higher tendency to work. And this is not the subject here, but I'll just tell you, this is what's based on what we call technical fundamentals. So classical patterns are one part, market internals are another part, intermarket analysis is another part, what we call the three-legged stool. And so we do MT lives on one, another. And so you get pieces of what's covered in a course, in little bite-sized pieces.
Of course, they work in downtrends. No, so here's another example, actually. Whoever asked, do I want to short this or buy this? And the answer is, I don't know yet. Right, Craig? Let's say, Craig, and you're good with drawing things. What if this gap down and close with a big fat engulfing bar? Guess what? Now I have a long bias because it's been going sideways and I have a price void. So it's a shock reversal of a bottoming pattern. But what do we have right here on the slide is we had an attempted bottom, lower highs. So sellers are trying to get out at lower prices. And now I have my nasty bearish engulfing. Our entry is under the day's low.
I just drew that then because I saw, this shock pattern. I was like, wow, how powerful was that? Where he had that big green bar followed by the big red bar right back down. And it wasn't a downtrend. So that was a real shock.
Look at the moving averages, all three of them.
Yeah.
This one, so we actually entered on the gap breakdown, but again, you can see, look at the moving averages. Does this look like a reversal pattern? No. I mean, we've been doing these MT lives for 5 years now, and we have one called trading bottoming patterns. And when we trade a bottoming pattern as a reversal pattern, we need I call it a something. Greg calls it an event. I want the flat 20 and 50. That's not today's discussion. So my presumption is a continuation pattern lower, which came to fruition on the gap down. And then we gave a what we call a directional option trade where we bought puts on this. This was whenever, and is LUV. We bought a bear put debit spread. All right, so Greg, tell them what your bias is on this pattern using our other concepts. This is what we call a symmetrical triangle. We have lower highs, higher lows.
Yep. So the chart on the left there is the daily chart, 1, 2, 3. Let me explain what's a 1, 2, 3, of course. It's a big green bar that opens near one end and closes near the other.
That's actually a typo, Greg. I just noticed that's weekly chart. Weekly, okay. Here's daily.
When I saw it, Dan, I thought that, but I saw it marked the way it is. And I said, it's interesting.
No.
I said to myself, it would be much better if the one on the left was the weekly.
Right. I have to have them reversed.
Yeah. Okay. So this is supposed to be a weekly chart, right? So forget that. It's weekly. And this one's the daily. So what we have here is this wide range bar, an igniting bar. And it's big for whatever reason, right? Dan's got this dashed line here, right there showing that's where that is. So what happens is that creates what we call a price void. There's a lack of support, but it's a power bar. Now, power bars are typically followed by resting bars. So, prices ran, a 3-minute mile, and now it's got to catch its breath. How it catches its breath. Patterns happen in so many different ways. When you compress the data, it just looks like a narrow range bar compared to the big bar. So now this slide shows an X-ray of inside that bar. And what happened was, what we covered, hey, the highs are getting lower, the lows are getting higher. And so we've got this bullish bias from the higher time frame. So our expectation is that it's going to go up. Now, I like this bottoming tail bar right there. So every time it dips down and it came back up. And notice how it just tiptoed under the line. Did Dan draw the line improperly? But this is what we all think when you start seeing, oh, it broke my line. It never breaks the line on the guy on CNBC, so I must be doing it wrong. I must have to connect the closes instead of the tails. This is the craziness that you'll experience. So we have this long bias. We see that there's room up above here to go higher. We see another bottoming tail bar. You just need to see it break above the highs, and that's a go. And you can see here, right? It attacked that level already. And again, the lows are getting higher. It's reaching an inflection point. So it should start going up.
Right, and the trigger is over that prior bar's high. All right, so flags, again, back to that other question. These are going to be bullish consolidations after a momentum move. And so we're going to have this flagpole, which I mark, and then it's a, it's just, we keep things simple. We don't use protractors or Fibonacci's. We're just looking, so the flag here results from a counter trend. It's roughly 30 degrees, controlled consolidation after a big move. It's that simple. Go to the examples. So here's my flag breakout, multi-month consolidation. I have flag 20 and 50. Now, this is also what we call a master trader buy setup, but we're measuring this counter trend retracement from prior pivot lows and the momentum move. So notice how I'm drawing these looks like this flag. It's a counter trend, bullish retracement. We're trading candlesticks. Here's a bullish engulfing close. We buy over the high, stop under the low. I have a price void. This is a closed trade. We held this for 8 days. It was just textbook simple management. You just trail under a prior bar's low. You can see multiple time frame here. I'm saying it was a 1, 2, 3 on the weekly, and we just sell it into 3 different lots and 30% return on that one. Greg, you have the saying, same but different.
Right. I mean,
Same but different.
and that sounds so simple, but the real value in saying something like that is that we all get caught up. Once we learn some pattern, we think, oh, we have to see that. And then we see some nuance of it and we get confused. And so we're all attracted to some kind of perfection, call it a holy grail. You go to some webinar and someone shows you latest, greatest indicator or some setup, but the markets just don't operate that way. So you got to understand, the broad strokes of it. Dan says it's the same, but different.
And,
Went up strong and looks like it, it should go up at some point.
And a similar analogy, as you were saying, that is you're a pediatrician. You're trained to take care of sick kids every day. It's factory work for that doctor. You're gonna get different sick kids coming in every day, and he or she has the tools and knowledge to diagnose and recommend a remedy. So yeah, same but different to us is take your swing trading course and you have all the objective information to understand what's going on with these candlesticks. Same but different. Come check us out in the green trading room. We have a live trading room starting at 9 a.m. every day. Greg does great pre-market review, market internals, our bias for day trading and swing trading. And then I go over opens, our tier 1 hit list, answering questions all day. It's a fantastic way to get to know us and watch us implement our pediatric business in real time. So here's just a bear flag now. It's just the opposite of the other one. So I have a nasty crack and downtrend, and here's my 30-degree counter trend retracement. But again, we're trading the candlestick patterns. My entry on this one would have been, it tried to bounce, and then this topping tail coming back down, slicing through there on volume, nothing to the left. That was my entry under this bar, stop high.
This one is more of your, this is pointing out, this is more of your classic kind of a flag because it has the ebbs and flows ups and down. And whereas some of the others that we looked at, which just look like the bars overlapping each other as they move down. But if you were to expand the data on those prior slides, you would see something like this, because here you can see it, the flag is supposed to be, the pole, right? And then it waves.
Right.
But, it's the same but different. Those other ones, you saw the bars kind of working its way down, but in a smaller time frame, you would see something like this. I just wanted to point that out, that look, the exactness isn't, it's a good thing to learn, but as you understand different patterns, compressing multiple time frames or expanding them, you see that it's really the same picture and suggesting a similar thing.
So now I'm calling this a rectangle. It's not a triangle. It's not ascending or descending. Here is my big momentum move up, and it's consolidating in the upper part of this big move. So again, our entry is the candlestick pattern. So on this particular chart, my entry would be over this maybe half lot over this small topping tail, and the other half lot over this pivot. Stop under here, and I'm off to the races. So, we're emphasizing the objective price analysis and not getting hung up on a mystical classical title, which is very misleading without the other analysis. So what's my analysis on this one? Inverse head and shoulder. Well, let's take a look. So strong uptrend, got extended, far from the 20, ugly deep retracement, couldn't bounce, made a new low. It went sideways for 8 days. Now I have 100% retracement, which is a bullish retracement of the breakdown. And it's going sideways at resistance. Look to the left with a price void.
That prior slide that you just showed, Dan, is the same but different. Meaning this one was in an uptrend. Here it broke down, and it's kind of like a head and shoulders bottom because it dipped down under, and that's what the other one did, but it was going down.
Right.
So the downside shakeout concept can happen in an uptrend or a downtrend. But when we see it, it's a powerful thing. It tells us that demand was strong and big money is sitting down here looking to buy this. And if it had gone lower, they probably would have bought more. Doesn't mean it couldn't eventually in the bear market go down, but as Dan said, it retraced 100%. And then it went sideways and it starts to, right? It's looking for it to break out. Now, maybe we should have done this, Dan.
Right.
I don't know, and then at that point, okay, now it's breaking out. You see, everything is really horizontal, looking to the left and understanding the patterns as we're explaining.
Yeah, and another benefit of this would, we call it red bar ignored. This red bar suggested lower prices. And the next day it reversed and closed at the top of the range. Same but different. Identical. This was a Q's inverse head and shoulder price void. Same but different. Same but different. So we give stock and option trades on these. We got a technical based approach to trading anything. So this I'm reading here was a put spread. So Greg, I asked you, love me. I love you. Love when I ask you this. So on this closing bar, what are the odds of we shorted a 332 put spread, which is under this entire 2-week consolidation? What do you think the odds of that holding for a couple of days?
Extremely high,
Exactly.
and that's all we can ask for, because look, I think we've all been through an experience where something pattern looks so perfect and it fails.
Absolutely.
That's what I like to call Mr. Schizophrenic at work. And but that's the unknown. You can't think like that. This was a great pattern.
And then
It's actually to go higher, but
no, right.
What this is just saying, hey, I don't think this will come back down here.
Yeah. And look at the 15-minute chart. So this is showing the morning gap from this bar to this bar. Nice bottoming tail, nice green bar. As soon as it took out the high, that 15-minute bar, we put on this trade. Same but different. So cream back in the days.
A
So
lot of these patterns.
yeah, I mean, so look at this. This red bar totally suggested lower prices into this gap fill, and it recovered and went sideways. I have a topping tail ignored, red bar ignored, closing breakout with a price void.
Were these all at the same time? These slides? Yeah.
No.
No. So
Well, some of the inverse head and shoulders ones were, because the market, it was the Qs, so it was this. So there was a lot of these at this time.
right. I'm asking because it happens a lot of times, whereas certain market environments,
Right.
the market forms similar patterns, and a lot of stocks that are
Right.
big parts of the market indices form similar patterns. And, we always like to share different things that's what's going on as other than what's in this MT Live. But one of the good and bads of situations like this is there can be this tendency will be feast or famine, meaning like things are choppy and erratic, and all of a sudden there's more patterns that you could possibly want to do.
Right.
And so, you have to make a choice at that point. And then, like throwing a dart.
Head and shoulders top. Again, combine all the concepts, think about supply and demand. So nasty downtrend here. This was an attempted breakout. Went sideways, got slapped back down. So I don't know what to do with this. Came up here. I have two heads now. One of those, a pilot in our green room came up with that name, so I kept it. Instead of one head and two shoulders, it's two heads. So I got two heads. Now I have a second shoulder. And then remember the 9 pictures we showed you of bullishness? This is what we call a bear 1, 2, 3 continuation. Look at this horizontal support. I got my price void here. This is a no-brainer short from a head and shoulders in a downtrend. So that's it, Greg. I thought I had a prettier slide, but here's our, this is Greg's amazing swing trading course, mastertrader.com/swing trading. And as you hear us apply all these concepts to every slide, that's what this course teaches you. And a logical thought building lessons put together, trade management, keeping a diary, trader psychology, amazing course. We have these specials going on right now. Mastertrader.com/investing special. We have this little 4-video investing series that just ended a day or so ago. And so we have great offers here on swing trading, directional, putting them together. Oh, it's kind of a early Christmas present.
So if you read that, you get the top-down course, which teaches you our approach, which is, this is how the markets are created. These are indices, these are sectors, these are stocks within those sectors. And this is how we go through picking, that from that top-down approach, what's happening in the big picture, the market, where's money rotating into or out of different sectors, what are the best performers, relative strength and weakness within those sectors. So that's what that top-down course does. It explains, as well as the basics of our foundational information, and then in options. And then the swing course gets really deeply into trader psychology and money management and patterns, so on and so forth. And so there's the directional course if you want to utilize that with options. And then if you want to take both of them, that's on special this month. And you do get a month of the advisory letter, which is what some of the things Dan was showing you. Those examples, those trades were from the advisory letter, and that's all included. So you can check that out.
All right, as always, we save time to look at charts, look at the market, answer questions, and that's what we're going to do right now. I noticed as we're talking here, the spiders just made a new high. Wow.
Yeah. I picked a Garmin on here, Dan, because it's one of those shock patterns. And I'm really interested to see if it holds on to this today, because you can see, let me get this, you can see this head and shoulders top.
Yeah.
And this breakdown, and if this fails and closes like this, we have to buy this above this high.
But Greg, that was excellent timing, because today's session is head and shoulders. So yeah, this gap down would have been a short today under yesterday's low as a head and shoulders breakdown with a price void.
Right.
But it had earnings, gapped over that ugly red bar, bottoming tail, and so Greg, tell them about when head and shoulders fail, you got to avoid to the upside.
And I remember this, Dan. I remember it because there was this is before Dell Computer went private at one point. And so it was 1993. They were going through some transition in the company. I don't know, technology. I don't remember what it was. And all you saw was people talking about this big head and shoulders top on the weekly chart of Dell. And of course, it brought my attention to it. And I'm looking at it. And I was like, okay, I see it. I guess it's going down. And it took out that right shoulder, and it made the most monster move to the upside. And it's like one of those things that's like, wow, that is powerful. Failure patterns. 1993. If the chart was available, you could find that. And I don't know if it is, since they went private and then came back again. But
it should be.
I see a head and shoulders pattern. I go and I put that alert there on that right shoulder, and it's like, man, if that takes that out, I don't know if it'll be another Dell move, but it's going to go up. So, and I saw this today, only because of the earnings, but everything else was going down, and this started going up. And that looks great. We'll see what it looks like. Would you want to look at spiders, Dan? Well, that's broken down.
Yeah. No. It's just, I noticed it made a new high, but yeah, no pattern.
Yeah. And I talked about this pre-market, that this is the pattern that should evolve, and now it looks, after the last couple of days, that it needs to come down here, and we'll see what happens when it gets there.
Well, Greg, show them CHD is a classical pattern also, which is, just a breakout. but we entered that yesterday. And it's, you know, what I call a bull rectangle. It's just there's the flagpole and it's just
Yeah.
marking time.
Right. And so these red dots, for those of you that aren't aware, it's just the software is just marking this with a bar that has 3 higher lows to the left and right. So when it does that, we now have a reference point where buyers showed up. And we assume that they're going to show up there again and then wait to see if we get a candlestick that forms there. And it did. And then this one, the range expanded and it closed at the high. And so when they close at the high like that and say, well, what's the difference? Why did this one close at the high and that one backed off? Well, the buying just kept coming and they only stopped because the market closed. And when we see that kind of a bar and within this pattern, our assumption is it should take out that bar's high. You know, the market opens up again, buying continues, and it should go up. And then, you know, you look to the left, there's another one, then another one. And so it stalls there, but it should work its way above this area, especially if the market has a little bounce. UNG,
Natural gas.
James, you must like pain. Look at that. My goodness. This thing has wild moves over the years, as you can see, and then fails. Wild move, fail, wild, complete failure again. And you know, I don't know if you saw it, Dan. They had that guy Rick that does the bond thing.
Yeah, Santelli.
Yeah, he was talking about him and his buddies about 5 years ago. And he explained, and I knew this because I used to be in the business. I've seen it done. They converted a car running on gasoline to run on natural gas. It works. Thing is, you can't pull up some station and fill your car with natural gas,
Right.
but it works and it's cheap and it works. Car runs exactly the same. So, you know, video looks like it's topped out. See the wide range bar? And now it's traded down below under the wide range bar on a closing basis. So at a minimum, you know, it's not going to go up like this anymore. It needs to rest.
It has earnings after the bell.
Yeah, earnings after the bell. I mentioned this in the newsletter this weekend about how things were, the earnings reports were positive. This was going down, and now over here they were negative and negative expectations. It was like, the fundamentals really matter? A little bit, but unless you're combining them with technicals. So this, just based on this head and shoulders bottom, should be buyable. We'll see what it does tonight, how much it comes down or not. But that'd be super bullish if it formed a continuation pattern.
Greg, TJ has a question for you.
How do you recognize an avoid chop? Well, you can't avoid it until you recognize it. So what does chop look like? Well, let's see if we can find something. This is chop, right? Tails and gaps, tails and gaps.
Overlapping bars. No.
Right. This overlapping bars, you know, big bars, then all the way back down to the bottom of the big bar. Big bars are supposed to result in something like this. Big bar, chopping around, closes in the top of the range, the halfway range, and then they go higher. And then all this sideways price action, and it's just a mess. And it can happen on any time frame. You can see here, uncertainty, overlapping bars, tails, and gaps. And you're never going to avoid it at the beginning because it's not evident at the beginning. Sometimes you get caught up in some chop and it's like, everything was working out so well and now it's not anymore. What else? See some other charts I have up here. I'm looking at a whole bunch of thumbnails. So that got wild, and now it's back below the bottom of there. And this is all choppy price action, gapping below and closing near the high, up and down, up and down. Bottoming patterns tend to do that, and then they get tight. Eventually, at some point, they get tight, which could be one of those triangles. Tim's saying that's CW. So there's a head and shoulders kind of a bottom. It's not a textbook, but it's different, but the same. Breakdown and deep retracement. It's a little above here and going sideways. That looks great. Right. This is the daily chart. Weekly chart. But that's showing great relative strength. Industrial sector, diversified industrials. We can go and look at stocks within there and see if they look the same. That doesn't. Let's sort it by the strong ones. So this is just a software that we use. So here, there's a strong one. But how do you get on board that? He needs to consolidate. But this is the one he mentioned, the best looking one so far that we see in the sector. Right, that one came down into support.
But yeah, no, that would have been a beautiful trade today.
Yeah, yeah.
Made a nice multi-bar turn on support. Big old void. That would have been a nice 5, 10, 15-minute high today.
Sure. The way it came down, and then this bar looked like it was ready, and it took out the lows and came right back up. That's what we call a tell.
I love that pattern.
Took out the lows and closed like that. Yeah. Were you sleeping? You didn't see this one yesterday.
I know. Well, the part of the reason is, in all seriousness, it only has 24,000 so far, so it's light volume.
Yeah, lighter volume.
But
It may not have been in a scan because
weekly looks great too.
Yeah, that would not have come up in a scan.
Yeah,
Because in the scans, I required to have probably on a 30-day average of at least 200,000, 250,000.
yeah, weekly looks great.
Yeah. All right. What else could we take a peek at? Wow. Here's a.
Hi, Greg. Here's another rectangle that we're waiting for an entry. BKI. Check that out. Daily, weekly.
All right, so that's pseudo 1, 2, 3, 4.
That's
Didn't break the low.
that's weekly. Look at the daily.
Yeah, that's what we were flagpole kind of thing.
It's a bull rectangle. Draw a square around that. That's at the upper third. Looks great. It's resting. Yeah.
And so I don't have any moving averages on here, but one of the things kind of as a timing kind of scenario, we could, the 20 MA is pretty far away. It's stuck right there at the 200, but it isn't going down. So the red line is the 200 and the 20. Sometimes the 20 catches up as a guide. But it's just chopping along here. So what I'm going to do, I'm just going to set an alert.
Right. So the entry on this one is over that other red bar from 2 days ago.
Put a little note there, break above pivot. And we'll see what happens. And you know what? No harm done. It really shouldn't go down there, but I'm just going to set an alert down there in case it dips. Maybe it dips down there and it'll turn into a bottoming tail bar. Sometimes you just get a whipsaw. All right. So this is software. The software sector was lagging for the longest time. And it's kind of coming around. It'll be a good one to take a peek in. And let's sort that. by volume. Let's just go through them and see. See if any of them have breakouts or big bars. That's bottoming. Still early, but it's bottoming out.
Yeah.
Well, that gapped up. I guess that was that earnings?
Yeah.
There's a pullback
Yeah,
and giant gap.
Yeah, today, this morning.
So this one would be great if it was to gap down tomorrow and come back up again, because clearly it's broken down and it's just stuck here at the 50. But as a counter trend trade, I could use it for a day trading, but not as a swing because it broke. Oh, that's not bad. That's not bad to keep an eye on this.
Sure.
This needs more of the box to form. So we'll just set an alert and see if it comes down to the bottom.
Greg, look at fiber weekly and monthly. This could be a home run entry.
What's the symbol, Dan?
FVRR, I typed it. It's a beautiful bottoming on the weekly and monthly on major support.
Yeah. Hey, look to the left. Why is it bottoming? And it's got a nice long base. Internet. It's another sector that has been lagging. It was lagging. So as things moved up, they began to move up at the end of last year and obviously in January. Software and internet were the ones that came later. And Google, Snap, that was bottoming and it failed.
Well, another bottoming. Look at Roku, and then our time's up. But Roku weekly, fantastic.
Yeah, there's like a 1, 2, 3. That's got the volume.
Absolutely.
And there's
Earnings last week.
so definitely put this one on your watch list to see that it begins to consolidate, maybe forms one of those classical type patterns that you take advantage of. We'll be watching it for sure.
Absolutely.
All right. So we'll be back next week. You can join next week and go to the site. There's a tab there for Master Trader Live, but we'll be back next Wednesday. We'll talk then. Bye-bye.
Thank you for listening to Master Trader Live. If you like the show, we invite you to share this video on your timeline or tag a friend who wants to learn stock market tips. Stay educated with our free chart of the week, a weekly analysis or lesson sent right to your inbox. We're live every week, and you can subscribe to the channel and press the bell to get alerts. If you've enjoyed the event, please give us a thumbs up. Just visit mastertrader.com. That's mastertrader.com.